Morning traders, welcome to the Traders Lab and happy New Year's Eve to all of you. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It's based on structured trades. These are available to all of you as well as the TraderLab community. It's all available in the Bookmap Discord server, and there is no cost for TraderLab. TraderLab is a community of like-minded traders who've come together to leverage their collective experience. It's a community of traders that are sharing their insights, their research, so we can all get better together. And unlike many other forums or chats, this is really the collective, because just like in futures trading, leverage creates opportunity. And of course, like everything else, what makes TraderLab different is it's really an unselfish place where traders can learn. And we have traders in here. Senior trader has over 50 years experience. I've got 47, both professionally and otherwise. And we've all walked in the same shoes. So it doesn't matter really how long you've been trading, what you do. What does matter is if you are looking at this more as a profession and to create sustainability, then the TraderLab might be for you. Trading really isn't a video game or a gambling process, though most retail traders end up doing that, maybe not even intentionally, because they don't understand the business. So is it really their responsibility, or is it our responsibility who have already walked in their shoes to try to give them some insights that may be helpful in their journey in order to create sustainability? That's why I created TraderLab, and it's really somewhat based on what I went through, because we all do the same thing. We've all done the same thing. But what I didn't understand early on in my development, and I started in 1980, was really what the business was. I thought it was squeezing risk out, predicting what'll happen and being right. What happens if that's not the business? And then you're trying to solve for something that it isn't. So maybe if you understand the business, you might be able to then differentiate your outcome from other retail traders who have a high failure rate. And it does start with understanding the business. So if you don't understand the business, and you might not know that, and the reason you might not know it is the same reason I didn't know it, and that is because I always had winning trades. Now you might say, well, isn't that the goal? Actually, the goal is to have a statistical edge. The winning trades are the outcome or the output of statistical probabilities that favor you. Everyone has winning trades. Doesn't matter. In the casinos, gamblers have winning hands. Does that mean that they're profitable overall? Well, what are the odds of that? And I'm using the term very specifically, odds. Well, in the casinos, they only play games with an edge that favors them, even though they pay the gamblers. Well, the gamblers have winning hands. What does that tell you? Do you want to be a gambler, or do you want to be sitting on the house side of the table? That's what the TraderLab's about. Understanding the business you're in, building out trade plans that have statistical probabilities that favor you, and understanding in the real world of business or trading, there is overhead and cost of production. I hope this resonates with you. And again, I want to wish you all a happy new year. Let's make next year better than this year. Let's take what we've learned about ourselves and the markets from this year and take it forward and keep moving forward in our personal development. And it doesn't matter how long you've been trading, that the length of time doesn't matter. What does matter, that if you keep waking up in the same place, then it may not be your intent or your effort, it might be your process. Wouldn't you like to know the difference? That's the thought. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room, but if we get there, we'll talk, as they say. Now, I have some important announcements for you. Right now, Bookmap is having a end-of-year sale, and this is it. It's going to be finito. And if you've ever wanted to get a high-tier order flow tool like Bookmap, this might be the best time to do it. I've never seen a sale like this before. I can't say what will happen in the future, not my job. I will say, though, this is unique, so you might want to take advantage of it if you've ever wanted to try Bookmap. Now, this is ending today. 50% off Global Plus, quarterly, and 50% off data. That's a 3-month subscription. 60% off Global Plus monthly subscription plus data. Ends today, not tomorrow, today. And 50% off add-ons. Any add-on, go to bookmap.com. If there's something you want to put your toe in the water on for add-ons, if you're already a subscriber, you want to check something out, great way to do it, right? Ends today. Now there's one more little thing, and this was the shock for me. And I'm saying shock because, I'm here just really as an educator, and Bookmap doesn't tell me much. I get the same information you do. And this is what I got in my email. And then they asked me if I would share it with you. So, of course, 30% off Global Plus lifetime. Pay once, finito, done. And this one goes through tomorrow. I don't know why it goes through tomorrow. Kind of surprised, but that's like saying, hey, here's an extra day. If you've ever wanted the global license, this is it. Never seen it better. That's all I can tell you. So don't miss out on this. And there's a lot more in the Bookmap server. By the way, just so you understand, Bookmap is a portal for traders. It isn't just about a high-tier order flow tool. It's about trader education. Now, this might sound a little strange to you since it seems so out of the ordinary of what we see in marketing world. But Bookmap at some point made a decision. And I think it's one of the smartest things I've ever seen. This is why I decided to do this educational portal, you might say, or do what I do for developing traders, is they decided that instead of selling their product, which of course that's their business, that's what they do, they would invest in traders. And if they invest in traders, is it possible then that successful traders will want to invest in a high-tier order flow tool? Isn't this an interesting concept? Put the traders, invest in traders, and then traders who can do the work and sustain themselves might purchase your product to create additional edge. Isn't that a logical thing? Where do you see that? I don't see it anywhere. Now, maybe it's out there. I've never seen it. That's what told me that Bookmap was a different kind of company, and it also told me it was a company I want to help achieve their goals, because my goal is to help traders achieve theirs. So it all fits together. And I hope that makes sense, and I hope you can appreciate why TraderLab exists for you and why Bookmap is investing in your success. Makes sense, doesn't it? Now let's talk about trading. This is a process. Now, the thing about volume profile, we all think about this in auction market theory. It's very simple. Now, why would you even care about this when you have all these indicators and all this great stuff out there and all the gurus and the Instagram and talking heads, all that? We all know about it, right? Why would you care? Well, I'm going to share something with you that I've found over many years of trading. And I started in 1980 before this volume profile existed. And then I learned it from the guy who created it, Peter Stottlemyre, back in, I think it was 86, 85, somewhere in there, at CBOT. So I learned it, and it made a lot of sense to me based on my previous experience. But I really couldn't use it. I said, this is great conceptually. What do I do with this thing? It's similar to when you see something, you go, aha, and then you go, now what? And we start out with a mechanical concept, but can we extract a concept and then make it usable? Well, over the years, I kind of gave up on it a couple of times. I don't mind telling you that. And the reason was I didn't understand it, even though I had all the literature and everything else. And I went to something called Market Logic School, where Peter Stottlemyre taught me the market profile. You would think, gee whiz, the guy who created it, I would understand it. Well, I understood it. I couldn't trade it. Isn't that a different thing? Don't you run into that? You can understand something, but how do you apply it? Well, it took me a number of years and a lot of work and a lot of dead ends. And then I started to see things and behaviors that were not in the literature at the time. And I was really kind of perplexed by the whole thing. So over time, I started, let's just say, going my own way. And I built something that I found that worked. And the reason was because I took what I appeared to be being on Mars and I related it to something I already understood, and that was shopping. And auction market theory is shopping. What's too high, what's too low, and what's a fair price. And to understand why we even have a financial market is determine pricing. Now, what is this? How does this work? Well, when you go to, and it's very simple, supermarket, if the price is too high, you don't pay it. But there's not a line out the door to buy your can of tuna. And I don't know why I use tuna, but tuna, if it's $5 a can, I think you might take a pass, right? But so there's going to be a price up there that somebody needs it for the casserole, but there's not going to be volume. This is how this volume profile shows us that price is not, all prices are not treated the same. Okay, if the price gets too low or on sale, the buyers are going to consume what the sellers are offering, but the sellers are going to now start raising the price and not offer it at that sale price. So is there going to be a lot of volume when it's on sale? Actually, no, because the price doesn't stay there. And then it comes back to an equilibrium or a fair price, and that's your retail price in the store. That creates high volume. So you have low volume at the extremes, high or low, and high volume, let's just say, at a fair price. Now, what adds a little more thrill for us is it's happening in multiple time frames. So all rotations are, as you think of them, time frame based. So inside of all rotations is an auction, and they kind of are on top of each other. A vertical integration. So this vertical integration is what you call time frames, right? And that's what it is until you get here. And that's order flow. Because order flow is the interaction of the buyers and sellers. It's not based on the clock. It's based on buyers and sellers. It's a different thing. So we can get inside of the clock, if you want to say, or inside of time, because we're not measuring participant behavior now at the clock. We're actually measuring it. It's like you standing in the aisle at the supermarket and actually watching the buyers take something off the shelf. So you're actually standing there and you're not using a stopwatch. Maybe it's a poor analogy. Now, the other element that is very confusing for us, at least it was for me, is something called context. Context is the condition of the market. Now, if you look at today, the condition of the market so far is it's going down. Okay, lovely. But inside of the down move in different time frames are different conditions. So the market might be going down overall in a higher time frame. But when you get a counter rotation, what is the condition of the counter rotation in the higher time frame? So probably sounds contradictory, but here's what's really going on. Rotations are created even in a trending market down because the market gets lopsided. So if the market's going down, there's always buy stops, right? On the upside of the market. If we run out of sellers in any rotation, then some sellers become buyers because the buy stops are lit up. Well, if you take that concept to higher time frames, which everything is overlaid on each other, it's always happening in all time frames. So if you can think in a global or vertical integration of time frames, then you can start pulling the lens out and seeing what might feed these rotations, whether it's counter rotation or directional trend line rotations. And under different conditions, different things matter. Now, one other little side note. Over the years, and I'm going on 47 years of trading professionally and out here with you, I've observed what other traders use and also what I did in my research and all the time I spent as a developing trader, building systems, managing money, and the rest of it. Many different time frames, many different processes over many years. And what I observed is that traders, many traders who are sustainable traders, have careers in this business, use the volume profile. They do not depend on indicators. In fact, they depend on retail traders using indicators so they can exploit their competition. It's something for you to think about. Doesn't mean that you can't use them. It does mean maybe it's a reason you don't have sustainable processes because all indicators generate random winning trades. But come back to the top of the stream when I said this is a business of statistical probabilities and edge, not random winners. Just hold that thought in mind. Now remember in TraderLab, and I'm going to get into today and what led up to it, and what is still operational. There's 60 PDFs of these structured trades I'm going to be speaking to you about. Now, the idea of these is just to give you something to think about. There is no plug and play. If there was, we'd all have plug and play, and we'd all be, we'd just go down to the basement to our ATM. If it worked that way, we'd all do it. doesn't, so we can't. We must do something else. So if you're waking up a Trader Groundhog Day, there's a reason, and it might not be your intent. It might be your process. Now, let's move along. If you have questions, please post them. And one word of caution for all of you is I am in Costa Rica, and I'm in a very fragile environment. The power was going on and off this morning. The internet was disappearing. This is part of the thrill. So if I disappear, if you're in YouTube or Discord in the Trader Lab, I will return. So it does take maybe 5 minutes for this thing to reset. So be patient. I will come back. Also, there's the Trader Lab community is accessible to all of you. There's no cost for it. There's a link in the bottom of YouTube, as well as all the resources in the Bookmap server. And in the Trader Lab, there's the community, a library of webinars, document section, and much more. So without further ado, let's go a little further. Let's see if I can put this together without blowing things up. Now, this is the higher time frame, and this is as of yesterday. Now, this is before RTH open, and this is what it means. This is the auction. Now, you guys, if you have candles, you see, your candle. But what's going on inside? Remember, in the auction, all prices aren't created equal. This is what it says. This is a language of the market. This yellow line, I'm just telling you what they mean. I'm not going to go, I can't do a deep dive here, is the highest volume. Remember shopping from a previous location out here. If it's too high, we're going to either tag it, test it, come to the area, and if we run out of buyers, I'm not paying that. Remember shopping? I can leave it. Now, if I leave it, there's a tail. Now I have buy stops there, and then I close lower. Okay, I have high volume here. So going up in an intermediate time frame, this is a fair price based on these 2 days. The highest volume is there. I gap lower here, and this is very interesting. Day before yesterday, we had longs in the morning, and we were looking for a gap fill. It missed it. Now, what right there, there's information being shared with you. Why couldn't we fill the gap? What happened here? There were sellers. The sellers were aggressive. We couldn't even fill the gap. That's what I call a canary in the coal mine. Like, wait a minute, what does it mean? It means aggressive sellers were front running a statistical probability that was around 80%-ish or more to fill the gap. Didn't do it. Because there's a high probability of testing the previous day's higher low. Did not do it. There goes the flag up. Red flag. Tom, pay attention. What does it mean? It means aggressive sellers. Now, so longs in the morning, shorts, and off you go. Now, here, the potential target was 69.30. Didn't get there. C'est la guerre. Important level. Keep watching. Now what? Yesterday, the target was 69.30. And there's sell stops under here. There's buy stops up here. There's buy stops here. Sell stops here, and it's an inside day. What's an inside day? Balance. What is balance? Two sides slugging it out, and it's neutral. And yesterday was what we call a neutral day. Watch yesterday's stream, because you need to understand how all the pieces fit together if you're interested in understanding the business of trading. It isn't each day in a vacuum. They all interrelate. And here's the other part of this. If we have sell stops here, buy stops there, what is this? This right here, 51-ish, is the what? Retail price in here. And you can see it. Outside edge. I'm not paying that. Right there. Outside edge. Oh, it's on sale. See the shopping. Where's the fair price? It's there. So if it's fair, then what? Too high, too low, retail. But what do I know? Come back to what I know. I'm not paying that. What does that suggest? Why were we looking for this on this day and this day? Didn't get it. So it's like, what's going on? I don't know. All right. But what else do we know? There's a gap. There's stops under here, and there was stops here, there's stops here, there's stops there's stops there, and the rest. That's what we know. But we also know for this, after the gap, the highest volume was at 30. And, of course, stops are under here, and stops are in the gap. And what's this yellow line down here, you ask? It's the retail price from this day. It was too low. Well, if we found too high, I'm not paying that. Too high, because that's too high. Too low, sell stops become market orders. And then what's under here? Sell stops. What's under here? Sell stops, fair price. Now let's go a little further. Very important you see how this all comes together. This is the ETH, and this is what sets up shorts for today, and is a surprise for me because you'll see why. The ETH low was down around 22, 23, which was a target, and 30, remember, a target. So when we did this in the ETH, I was thinking, well, they stole our trade. That's exactly what I was thinking. But then we came all the way back. But the next thing is, what is this up here? This 51. 51, right there. You see what it is? It's the fair price or retail price from yesterday's RTH. So in the ETH today, this morning, after being down here, we come all the way up here. So it's a reversion back to what was what? The fair price. But what happens if it's still too high? What happens if this price is too high? What happens if that price is too high and this price is too high? And if this is too low, now I come back to what? What was too high? What was too high? Watch. So this is auction market theory. Taking too much time for you? Well, this is trading. What can I tell you? So what was too high? There's the 51. So in the end, what else is here? This is how you can narrate the market. Now, what I'm showing you is everything before the RTH open. What does this have to do with trading, you're asking, right? What do I need this? Well, do you think other retail traders understand this, or even conceptually? What does it say? This is a language. There's no indicators here. What is my, quote, indication? It is participant behavior. This is the retail price from yesterday, the fair price. Why did we leave it? Maybe it's too high. We are now coming back. This is a price check in aisle 3. You ever hear that in a supermarket? Price check in aisle 3. ETH high. Now right here, I'm looking at it, I'm going, yeah, I guess that's too bad. The shorts are over. This is exactly what I'm thinking. Already did its thing. And gee, don't I wish? Right. Well, test to the tick. And what am I seeing here? Sellers, icebergs, absorption. No clue. Right there, sitting here in the Barca Lounger. Now let's look a little further. So this is a key location, but it's the ETH. So I don't know. Watch. Now I'm still in the ETH. It's a half hour before RTH open. Watch what you see. Now right here, I have no clue, but let's look at the sweep detector in Bookmap. So the sweep often suggests a counter rotation. It does not suggest the end of the world or anything else. It just suggests potential. So the tools in the order flow pool in Bookmap is saying, wake up, you might get a rotation. Yeah, but I already know I'm heading into a key location, and it could keep going. There's no prediction here. I hope you didn't think that we can predict anything. Maybe you can. Me, not so much. What I try to do is align. Now, I see this behavior, and it's like, whoa, wait a minute. What happened? I'm not paying that. ETH high. Uh-oh, trouble. And sweep, location, location, think real estate. This is how the auction works. Location, selling. All right, right there, that's change. So now what do I know? I know I found too high. I don't know what's going to happen next. So let's get over it, please. Now, so what do I know? If I'm returning to a fair price and I reject it. Now, this is about as precise as anything gets in an environment that has no precision. Isn't that an interesting thing? So, and I don't know until hindsight. So, c'est la guerre. And now I'm coming into my RTH open at 8:30 Central Time. Now I'm going to take you to the context grid sheet. Now, this is where we have to step out of being mechanical and we have to understand market mechanics. Let's go and talk about this for a second. So, this is the value area. Value area from the previous day is where 70% of the volume took place. The fair price from yesterday's RTH is here. Remember, the shopping experience. But what happens if we test yesterday's fair price and the participants don't think it's fair anymore? Have you ever paid a price, leave the store, and then you come back and you say, you know, I'm not going to pay that. Here's an alternative product, or this is now overpriced. Now, remember, in our business, pricing is always going on and price discovery. So it's not a static environment versus your store where prices don't change too much. But imagine this is a real-time supermarket with real-time pricing. And we come back to a previous price and it's too high. If we reject it, that tells you something. That's the auction. I'm not paying that. Price check. Forget it. I'm out of here. And there they are, getting in the car, leaving the store. Simple. So now we come to the RTH open. Here's what we know. Let's talk about what we know. We know this has been rejected already in the ETH. Let me tell you what else we know. We know there's over 98% probability to test either the ETH high or low. But what else do we know? Now, this is going to get you a little bit. One moment. Losing my place. There's about a 68% probability of going here, a 98% probability of going there, and we already went here. And settlement value area low. So we're opening where we settled on the edge of something called value. Now, this is very tricky with the exception of the primary element for me, which is this and that. Because if you come up, and I'm spending time here, if the ETH tests a level that's very important, the fair price from yesterday, and we get our sellers, might that, here's the language of the market, maybe, and I'm always going to say maybe because nobody knows, that's too high. Well, if it's too high, then where's my outside edge of a fair price? It's going to be down here, what's called value area low. Now let's come back to our grid sheet. We are opening in range, in value. But we're on the edge. And once again, what did we do? Too high. So I'm already oriented towards short somewhere and willing to take a stop to find out like everybody else. So what does it mean? We're on the edge of balance. So what is possible? What's possible is that if I come outside, that we can go lower. That's what I know starting out. That's a long way to get you oriented to what might happen. Now, RTH open. Now I'm going to take you in. Now remember what's important in all this. And this did not happen in RTH. This is a continuation of this. I did not take a short here. Not me. Sitting in the Barca Lounger waiting for the RTH open. And when this happened, I already knew I wanted to get short because of the auction. Then I have to find a location. Let me show you. So I'm oriented to shorts. I know I'm on the edge of value. And I know if I come outside, I can get short. I want to get short. So let's look. This is the RTH open. This is now, this yellow line called developing volume point of control. Moves higher. This is the retail price on steroids. There's no volume, so as it comes in, it moves all over the place. This is this is very aggressive place to trade. I don't suggest it for anybody. I tend to take more stops in this configuration, but I know I want to be short. After that, I don't know. So here it's going up, and I know I can, once again, I know I can get to the ETH high, right? 98% probability. So this is a variable high volume node. I'm going to label it. And when I use these as a proxy for support and resistance because it's shopping. Does that make sense? So right here is what I perceive to be resistance, support, break high, going to the moon, break low. Now what? Under here. Here, let me show you. So right here, so this is just the way to look at this. Support, resistance, support, break high, support, going to the moon, break low, resistance. Now, if I get under here and I'm at the edge of value, it might be a short. Watch. Break low, test. This could be a short, and here's why. While I don't know anything here, I see my sellers take control here. So that's the first thing. Sellers took control. I come back and I have high volume. Let me show you. Let me get this other stuff off the screen. What? I got to get this off the screen. Okay. So right here, so this is support. This moves up. That becomes support. This high volume here now might be resistance. Don't know. If I come above it, and I'm just waiting because I have a 98% probability of the ETH high or low. And at this point, the only thing that's keeping me off longs is the fact that we checked that naked volume point of control above. So I have support here. So now I'm thinking longs. But what's stopping me? We overnight high checked the naked volume point of control. So at this point, I'm just waiting. I don't know. And by the way, I never know. So it's not about knowing. So right here, support, 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 you see? But what's happening up here? The same thing that was happening here. Absorption, support, absorption, 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 absorption. I'm thinking, hey, weak high. Support, support, break low. Now support becomes resistance, break low. Sellers. Where's my resistance? It's these sellers up here. Come back, break again. So, how do you get into this? Once this is tested, and I'm clueless, don't forget, I'm always going to tell you I'm clueless because I don't know. Where's my support? It's there where the buyers. So I got resistance, I got support, and if I don't squeeze out these sellers, that's important information. So break low, test, short, and there's another way into this. Let me show it to you. The other piece to this, and this I'm going to say is not, quote, easy. The other piece is value area low. So if I break out of value, what that is saying is I'm rejecting. Now I already know we rejected the naked volume point of control, and then I have value area low. This is my outside edge, and I got settlement. If I break out of value and I go back to my grid sheet, what does that mean? We're now moving out of balance. And if we break out, then we want to trade in the direction of the breakout. And then we have our sell stops under here. This is called VPOC migration, but it's the language. Too high. I'm going to label this thing. Because what happens if we come back here? And you always have to be aware of the possibility of squeeze. So let's keep going. VPOC migration, let's label it. This is another opportunity for a short. These are very aggressive trades, and you have to have unconscious competence. One of the things about trading, at least for me, is I don't know what'll happen. I know where it might happen. So I'm already ahead of it. So if I have a VPOC migration in a test, I'm already there mentally anticipating it, and my finger is on the trigger, and I put the trade on. If I rotate here, I already know I have VWAP in mid. I'm directional. I've broken out of value. That means shorts only for me. And if I get a counter rotation, there's two places I can sell this. I can sell it here. I can sell it here. And my risk is going to be out here. So that's another short. And again, you have to adjust number of contracts or go down in whatever, number of contracts, go to micros, whatever it is, because of volatility. You have to know that your plan already has to exist for this. Now, overnight volume point of control. Next target. And there's stops under here at 36. And remember, 30 is our primary target. There's a roughly overnight volume point of control, almost an 82% probability, past performance not indicative of future results, that we get there. And what is this? This is the fair price from the ETH. What's under here? Yesterday's low. Stops. If I'm taking shorts, I'm already targeting yesterday's low and an 82% probability to go here. And let me give you one more statistic. What is the probability of taking out yesterday's high or low? 82%. So I have an 82% probability of taking out either yesterday's high or low. So let's go for this. And 82% to go there. What do you think? Can you see how you start putting pieces together? Now, there's more. And what is our higher time frame targets? 30. Next target. There's more. And here, this was a target from the ETH. By the way, look where the ETH low is. This, I thought initially that maybe this move down was taken away in the ETH because we hit these targets, you see. ETH low. So if we have over 98% probability to take out ETH high low, do you think we're going to take the ETH high out at the moment? Me, I'll take a wild guess. No. So where's my targeting? Here. So 82% probability to go there. 82% probability to take out yesterday's higher low. 98% probability to take out ETH higher low. You have to bet everything for yourself, and it's all context specific. Okay? Next target. You could be done back in the Barca Lounger, or there's more. Why might there be more? Because there's sell stops here, and I don't know where we are, so I haven't seen it. And there's a gap under here. And where does this all come from, you're going to ask? Tom, what are you talking about? Yeah, I know. Ask myself the same question. Because I'm not in the business of predicting. I'm in the business of alignment. So in the ETH, we tested the retail price. Inside day. Sell stops here. Retail price target, remember, 30 from these past 2 days. Who knew? Target. Where's the sell stops next? Under here. And why do we even think this might be viable as a trading process? Because when the market goes down, there's buy stops from the shorts. When the market goes up, there's sell stops from the buyers. That's called market mechanics. So the longs have the sellers are under here. What about here? Well, sell stops coming out, 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 and then what? Gap, and where to? Maybe over here. This is the auction. What is it going to do? I'll let you know when I know, because I don't know. Is everybody tracking? This is a way to slice and dice the market, not to predict, but to align. Here's the current low a day, and there's more stops and a gap here. Now the question becomes not what we're going to do. How do you align? Let me show you a little bit more here. This is called VPOC migration. Made it up, who knew? And this is the retail price. Remember the shopping experience, multiple time frames. If this is too high, which it is, and I leave it, now if the volume shows up over here, this is the new retail price. And since we're out of value and out of range, personally, at this time, I have no longs. I am not a counter trend trader. I use the counter trend for alignment for continuation trades. Now that's just me. Other traders trade counter trend with trend, doesn't matter, right? Well, here's the answer to all of the questions. You have to isolate the specific conditions and then have vetted trades that are qualified for the current condition, which will change. So you'll know which trades to deploy in the current condition. Now, the problem with current condition is that it will change and you'll be zigging and the market will zag. So that's why we take stops. We get out of alignment. And there's other reasons too. Errors, gambling, FOMO, but that's a different conversation. We all have to deal with that, and we deal with that all the time in TraderLab because you got to understand it. Most of you don't. And you can learn about it because the biggest obstacle to sustainability in this business isn't learning how to trade. I believe anybody who comes to TraderLab can learn how to trade if you do the work. The problem is learning about yourself and the wiring and the psychological aspects or impediments to operating in randomness. It's a whole different conversation, and nobody gives it the time or the interest that it deserves. So this is called VPOC migration. This is a trade structure in the TraderLab. Now, why might I be doing this? Well, why would I take this trade? Because I have aggressive long liquidation. I have a holiday, in case you didn't forget. And if you're long in this market, might you be taking some dollars off the table? Just a question. And I have what? A 98% probability to take out the ETH higher low. Why wouldn't I be taking continuation shorts? Do you see? So, and there's more. So here is a short, fine. Now let's go back to the sweeps. Remember I was talking to you about sweeps, and at the high of the ETH at that key location, the naked volume point of control or retail price from yesterday, which is too high. This is the current retail price. And this one is too high. I can use the same concept. So right here, the market's going to zero, having a great time. Get that champagne out, not only for New Year's Eve, but let's celebrate. But what do I see? A sweep. As soon as I see the sweep, the antenna goes up for what? A potential rotation. This is how the sweeps work. Now, the thing about all tools, it's not mechanical. It is contextual. What's the context? Now, so how do I use this? Well, subject to my individual plan, I can manage my trade, tighten up my stop, and get taken out. One possibility, subject to my individual plan. Or my stop on my runners is way out here because I know I have this 98% and the first hour's low coming out 98%-ish. If I know that, wouldn't I keep taking short continuation trades towards statistical probabilities? See what I'm saying? So if I understand statistical probabilities, then I'm going to use them to help keep me oriented, not to predict, but to align. So let's look. Last shorts here, going to zero. Sweep, trouble, potentially. Pay attention, Tom. Okay. Where's the change? It's right there. right there. And what does it look like? Now I'm going to take you down into something I call microstructure. Remember how this auction concept works. Shopping is taking place in all time frames. And we don't know. So let's take off this idea that I'm going to predict anything. If I could predict something, I'd just take the winning trade and I'd leave the other ones for somebody else, wouldn't you? So if we can agree that we don't know, then we have to build a solution to operate in randomness. That's all I can tell you, because the rest, I don't know. I gave up trying to know anything. The thing I know is my plan. I don't know anything else. And the only thing that keeps me in business is following my plan that has an edge, not predicting anything. I don't know right here anything until this. When I see this, what my objective is that we keep going, obviously. And we can come below this and then whatever. So it's just an alert of behavior. The book is swept. Now what is happening? Buying icebergs are down here. Now they're all over the place, absorbing. That's okay. What does it mean? I don't know. But what do I know? 98% probability. So I'm not looking for longs. I'm using trade management and I'm looking for repositioning and alignment. So let's watch. This is my retail price in the developing time frame. Highest volume so far. What else do I know? Let's keep going back to what I know. I know we ran quickly down here, and that if I run quickly, I have to always look left for the swings. Now, this is where we ran. The running aspect of the market means it's not auctioned. It's called a low volume zone, and it's here. In other words, the market tends to do too high, too low, retail. If this retail price or high volume is too high, we leave the store. It's a mini mart. Then we get in a car and drive away. Now we start a new auction. Too high, too low, retail. Okay, right there. However, this did not auction. The nature of the market often, now see, it's not, it will, it's maybe, it might, is to come back over these swings, because why? There's buy stops here. There's buy stops here. And this has not been traded. So I know that if we come outside, which we can, that I can look to sell it to come back to a fair price. Remember shopping. I'm not paying that. Retail. Oh, it's on sale. So how do I know down here? Well, only in hindsight, guys. Sweep, high volume, right there. And what has to happen for me? There's my buyers, and what has to happen is this goes lower. But where's my volume in the shopping experience? It's right there. And you can see the node sticking out. So right here, it's got to get below this. And there's my sellers. Why doesn't the market go down? Because there's absorption here. You see the red delta going to zero, Lewis. But why doesn't it go down? Buyers. Passive. That's absorption. Break high. So what has happened here in this microstructure? Buyers were here. Buyers that were here are here. And now you see the extension. This is a trigger. Now, what do I do with it? What's my plan say? Here's the possibilities. Exit. Or my stop's way out here, and I'm going to take big lumps and give back big MFE if it comes all the way back, and that's that, and we come out here. This is time frame related in your plan and your mental state. Can you handle that? Me, I get a little perturbed. So what I do is I manage my trade, and I already know ahead of time, not what will happen, but where and why. And then clueless like everybody else. Too low. Squeeze. Where's my stops? Right there and there. And my low volume. Remember? Let's see what it does. Low volume outside area or edge. So I know I want to get, and is the trend up or down? Well, for me, I want to get continuation shorts. So if this is my plan, and I'm not saying it's a good one, it's just a potential plan, when I come to mid and VWAP, and I'm out of value, out of balance, doing the Acapulco cliff dive. I have a holiday tomorrow. I tested a key level up on top, right? Everything says south until it changes. And yes, I will take stops if I get out of alignment. Overhead and cost of production, not a right or wrong. Outside edge, icebergs, stops, going to the moon. Look at the delta. Oh my goodness. Then what? Sellers, location. Remember real estate, trigger, resistance, location. Notice the sellers. Watch. So this sets up your short. This is VPOC migration. And what do we know about this from before? In the stream and every stream I do, the language of the market. What does it say? Whoops. Great question. What is the language of the market? Let's speak market. Let's forget indicators. What are they doing? I don't know. Don't use them. Been there, done that. You, up to you. Me, not so much. Language, retail price, outside edge, squeeze, get the stops in the low volume area, and then where's my buyers? Well, they're right there going to the moon. Change, location, mid, VWAP, stops. Here's something a little more for you, just to keep it interesting. Coming up, 35 buy stops, 1, and what's it going to do? Keep going. Change, buyer. So there's buyers here. There's the iceberg, absorption. So you got sellers there, buyers here. No clue. High volume is right in here. This is your little auction. Oh, it's on sale. I'm not paying that. And it does one of these. And it just happens to be the ETH volume point of control, the retail price from the ETH. Isn't that an interesting coincidence, you say? Well, yeah, it is. Is it still what? Too high. What happened at the ETH high? Naked volume point of control from yesterday's RTH. Too high. Come back to the ETH retail price. Is it still too high? Yes. Don't know. Watch. So where is my resistance? There, out here, don't know. Break. Now this. Short. Where's my support where I had my buyers? Here. And where am I trying to go? 98% probability. Am I taking too much time? I'm giving you what I think is a reason to understand market mechanics. And where do we come back? What is this, you ask? Isn't this where we had our buyers and our sweep? Isn't this too high? Too high? Too high? Isn't this where my buyers were? Isn't this support? If I break below it, what does it become? Old concept for old traders. Resistance. Resistance. VPOC migration. What is this all about? Resistance. All of the, and over 98% probability to take out the first hour's low, which is at 9:30 Central Time, which is there. So all these are shorts with statistical support and, of course, risk. Stops here under another low someplace. VPOC migration. Resistance. VWAP. Now this, if you took this as a continuation trade, this is where you're trying to go. This is what it has. Okay? Up to you. And this would be what this would be is a continuation short back to IB and this. And then after that, trade could be done or you're managing it. Let's see. And what else do we have below? And I'm going to be current. The gap. So as far as I know, not a recommendation, go south. Are you guys tracking? Is it blurry in Discord? It might be your setting. I don't think it's mine. And everybody else have blurry in Discord? Or if someone has is that generic, guys? Yes? What does that mean? Yes, blurry? Willers? In Discord? Huh. Well, that's a nice thing to know. I wonder if I can change that. Dan or Steven, are you in here? Can I do something here with this? Oh, I'm doing it on the clock. Okay, I got about a half hour to go, guys. By the way, you can, in YouTube, you can review this stream in YouTube, and that's it'll be available, and you guys can kind of dig into it and take a look at it. So we have more stops under here and the gap. Let's go back and take a look at the higher time frame. Well, so look what we accomplished. ETH high. See you later. Thanks for playing. You get a coupon to the buffet. And then the next thing is this gap. Now, I'm not saying we'll get there. It's not my job, right? What's your job? Isn't your job alignment? And then trade management, structured trades, statistical probabilities, mental clarity, and managing your emotional state? Isn't that your job? Right? Okay, so it's not worth... Okay, guys, if you're having a problem with the Discord server, I've never heard this before. I am streaming from Costa Rica, and the fact that you're seeing me at all from Costa Rica, I'm on the edge of the jungle. It's going to be 90 degrees here today. I'm actually perspiring, if you can imagine. Now, I know it's been pretty cold in Chicago, where I'm normally, doing my thing. I do trade from here, but I have to tell you, I go down to micros and I really strip it down because the power goes out, the internet goes down, and I can handle the micros without, So if it goes down, because everything is server side now, didn't used to be, if it goes down, my stops are in, my targets are in, it's okay. Just saying. By the way, if you're visiting in YouTube or you're interested in TraderLab, TraderLab is a group of like-minded traders who come together to leverage their collective experience. What makes TraderLab special is that traders donate basically their experience. We have data mining going on. And, many traders are very selfish. And I'd say that because over the years, I've met traders who think they know something, or maybe they do, and they have information, but it's like, gee, I'm not going to tell you. And it's like, really? Why not? What's the big deal? Do you know no matter what any one trader does, we can't replicate what somebody else does? That's why all the times you've been going to these chats or subscribing or whatever you do, influencers, Instagram, you can't replicate it. What I have found, and the reason I give freely of what I've learned, and I've paid huge tuition to learn it, of course, is that I know that there's no plug and play. It never worked for me. And I went to seminars. I bought everything you did, many years ago. And back when I started, you had to get on a plane, stay in a hotel. There were no PCs, no internet. You actually had to go do something. I remember buying books back then. A book for $100 back in the 1980s was real money. It's not $100 today, right? So I did all that stuff, bought all kinds of software, did all kinds of things. I mean, just anything to try to figure this out. And, you buy these things because you believe that they can help you. Well, a lot of them don't help you. In fact, a lot of them keep you spending time and resources on something that just is random, that has no edge. So that's, I think, the fallacy. Even if you come to TraderLab, that doesn't mean you're going to become a successful trader, because a lot of traders just keep jumping from educator to educator, idea to idea. And but if you can't understand really the global aspect of what trading is, isolated pieces are just part of the problem, because it introduces more randomness. I know that's hard to accept, because you'll hear it, but your FOMO and your desire for trades and profits will overwhelm what might be true, in the sense of understanding the market. So everybody has to sit back. In fact, I challenge all of you, whether you're in TraderLab or wherever you are, just visiting, to step back. It's New Year's Eve. We get a chance to start over in some ways and extract what we've learned from this past year. What have we done? You should make something called, they had a thing called the Ben Franklin balance sheet that I remember. It's like, but you put the positive and the negatives. And what did you do well? What didn't you do well? What things are still plaguing you? If it's FOMO or fear, what, all those elements, bailing out, not having a plan, not knowing if you even have an edge. What are those things as it relates to this business? Is it your emotions? Or is it just not doing the work and being controlled by your mental state, the juices, the hormones? Do you know about that? Sit back, put all the elements down that you can imagine, from trade plan to understanding market mechanics, to your dependency on indicators. How many chat rooms have you been in? How many experts have you listened to, educators? The one trade you need, make X amount of dollars, in the first 5 minutes, and that's all you need. I see so many things out there that it upsets me, and it actually angers me, because it's marketing and it's appealing to this primal need, to be right, to get approval, of course, to be successful, but to avoid risk. And that thing to avoid risk and seek certainty is, I think, a primary driver. So we always are attracted, kind of like bugs to a light, to the things that are primal for us. So I hope you'll take that in the spirit that it's given. It's not a criticism. It's just observation of many developing traders who are no longer in the business because they couldn't control or even understand the things that drive them to make choices. The choices we make are not necessarily conscious, because primal wiring is under the hood. You don't make conscious decisions in this area, because you're basing your experience on everything you've already done in your life, which works, or else you wouldn't be here. But the things that work on planet Earth don't work in this environment, because it's an alien environment for us. So we're going to try to make it like Earth, but it's not. Just a thought. So take your time to do that. Does that make some sense? Yeah, Sean, there's givers and takers. And then there's those that, basically are looking to validate themselves. It's all psychological. I've just seen it over and over. And the thing about it is, I think that's why I always say you have to vet everything. Everybody has to vet. In other words, you come to TraderLab, no matter what you see in TraderLab or any chat, you don't know the source, and you don't know if, the person that's providing information. And I'm going to say, me too, okay? You've got to vet it. And I'm even saying that because I won't want you to treat me or the TraderLab any different than any other community. Because if you start from being suspicious, then you have to prove it. If you prove it, you develop confidence, and then you can execute it. So you have to do that. That's the work, okay? So if you come to TraderLab, it's no different than any other community, except it's a professional community and it's not romper room. There's mutual respect. And, everybody gets a little frisky from time to time. We're in a high stress environment at times, but it's respectful and it's a leveraged community. We help each other. It's just the way it is. And it's not necessarily the full answer. The idea of TraderLab, it doesn't matter how long you've been trading. It's for you to differentiate between randomness and quantifiable metrics, how to get them. And this is not complicated. All you got to do is keep some records, really. And you only need one trade for a proof of concept. Have you ever thought about it that trading is not 10 setups or 20 and everybody says, give me a setup, show me this, show me that. I was the same early on when I started out. I thought this was just show me what to do and then I'll do it. Wouldn't it be nice? No, don't work that way. So over time, you learn that too. So, and the thing about it is we are so attracted to that because of our need to be right, to get approval, to prove it to ourselves, our family, because everybody says, oh, you're not going to be successful. And we typically can't share this business with anybody. Nobody understands trading. Who does? I mean, I have to tell you, I've been doing this 47 years. If I start to, I can't even talk to my wife about it. Immediately, the eyes gloss over. She doesn't relate to it. It's risk. That's all she knows about this risk. Well, all businesses have risk. It's time frame risk, isn't it? If you open a restaurant, don't you have risk? Different time frame risk. So here we have risk. Same thing. It's a bit different because we also have unlimited risk. So different kind of risk, but we still have risk. But we also get our results very quickly here. So it's very similar to any business. Now, if you extrapolate it to a gaming business, then we understand random distribution with risk. But with edge, we understand now risk is overhead and cost of production because all businesses pay bills. Restaurants do too. So you see, we can start comparing this to other businesses and not treat it like a video game or gambling. That's just all I can tell you about it. If you come to TraderLab, you're going to hear this all the time from me. This is a change in behavior at the moment. What are we doing? The market goes up to go down. The market goes up to go down and goes down to go up. Intraday, it operates the same way. So what we know now is currently the fair price or highest volume, remember the store, is here. We know the developing value area where most of the volume is this right here. We know the mid is there and stops are there, and this is the outside edge or low volume area. And there's going to be stops here above the mid in here. And this is the next high volume area. I'm not paying that. Yeah, but it's on sale, retail. And then if you leave it, now this is the highest volume for the day. If we counter rotate and squeeze, what's the condition of the market? Short. What is the trend? Down. In different time frames, different behavior. So we can rotate up. And if we come out here, and this is not a trade recommendation, we can squeeze and we can even come further outside. There's no precision. We can then return, and it's called mean reversion or not. It really depends what happens. You can also come up here or we can do anything. It's just the way it is. So we know what's the condition of the market. Well, previously the market was long. So what happens? The market goes down to go up. Now in the developing time frame, the market is short. That can create, if you remember the top of the stream, we can go up to squeeze the weak shorts out because there's buy stops above the market. This takes place in all time frames as you think of time. So this is time frames. So in here, retail price, in the microstructures, shorter time frames, these are auctions. Too low, too high, retail. If this is too high, I'm out of here. Get in the car, leave. Now what? Too high, maybe too low, retail. So I can rotate. And this is called mean reversion. Underline the term mean, and what's mean about mean reversion is where's the outside. That's the part that's difficult. But this is the primary condition of the market. It is always reverting. Now, here's the thing, and this is just to give you something to think about. Mean reversion is the market returning to test high volume. In the ETH, which this is the ETH high, this is the mean from this day, yesterday. If we revert to the mean and it's too high, I can go, I'm not paying that, and leave the store. Now, in a higher time frame, we had a mean over here, which is why it was a target. If this mean is too high, I can go to the next higher time frame mean. That's why 30 was a target there. Turns out here, who knew? Then, if we can get below the low of the day, the next mean, and this is important here, by the way, but this is a gap. So we get under here, we might just test here, come back in. Not my job. I just manage my trades. But if I can get traction under here, this is the mean down here. And the market tends to move from high volume to high volume to high volume to high volume and rotate along the way. And then when you're inside of the day, it's actually doing the same thing in multiple time frames. Now, this will confuse you, but what's going on over here? This is high volume. Break, test. I'm not paying that. This is high volume. Too low. See, so too high, too low. Rotate. And where's this here? Let me see if I can open this up. I want you to see this. What's this? Let's look together. Follow the yellow brick road. What's this? I'm not paying that. All right. Too high, break low. New retail price. Oh, it's on sale. Too high. Too high. Retail price. Are you guys tracking? Can you see something here that might be curious to you? What do you think? How are we doing in YouTube? Please give a like if you're visiting in YouTube. This is about the business of trading, and this is auction market theory using the volume profile. I think what I was starting to say, and I don't remember if I finished the comment. A lot of the traders I know over the years who are successful professional traders, they're using the volume profile. I've worked with hedge fund managers, and I think you might know who I'm referring to, and we did work with Bookmap on custom APIs, so other things that I've done. And it's order flow and it's auction market theory. It's the volume profile. It is the chassis. And then it's extracting order flow phenomena. Now, we see certain elements here in Bookmap, but if you, depending on your team and things you can do, you can do more with it. But we as retail traders, and I keep this really something everybody can learn, you know. The idea is, I think we all come into this thinking that complexity is where, it's at. This is complex. It's not complex. It's just random. So the more you can remove, not add, the more you can remove, the more you can quantify process. And the more you quantify process, and you have a limited number of pieces, so you don't have exponential noise going in. You've heard this. There's an old saying when PCs first came out and DOS, but it used to be garbage in, garbage out. Well, many of us in the trading, as we develop as traders, we throw the kitchen sink at it because we think more indicators gives more certainty, right? Well, it's the opposite. More gives you less because you have randomness. Remember how games are played in the gaming business or casinos? Fixed inputs, not variable inputs. It's a very big differentiation from what we do. We use random inputs and a lot of variables to think that we can squeeze risk out, but we're doing the opposite. All we're doing is introducing randomness in a random environment. It's like exponential chaos. There's nothing there, just randomness. Well, random inputs, random output, random environment gives you random winners and losers and gives you a way out the door because you have no edge. That's a fact. So now, if we understand that, then we have to come at it the other way. And initially, when I started, after building systems and working with them for years and managing money, and I kept coming back where I was always doing optimizations, systems, you optimize them. I was working towards machine learning neural networks. So I have a pretty interesting background, which I don't talk about, but the background doesn't mean anything. It's what I learned. It's not what I do. It's what I learned, because I learned that the things I was doing to try to was based on a primal need to avoid risk, right? So I built systems. In fact, you guys might have heard of TradeStation. Early on, I worked with Ralph and Bill Cruz out of Miami with a product that they developed pre-TradeStation, and it was early versions of Easy Language. So I was really early in a lot of this stuff. There was no real-time data available. Had to buy data on floppy disk. It was very expensive. And then you couldn't buy tick data. You could only buy like time-based data. So for me, short term was 15 minutes. That was like, wow, and it cost a fortune. So I could do back testing and write code. Just telling you, sidebar. So I came from these places, and all my choices were being driven by a psychological need, because I believed, now there's the truth, believed that my job was to squeeze the risk out and create certainty. Now that might sound really logical, right? But the choice to do that was not driven by the facts of the business. It was driven by emotional, primal wiring to avoid risk, seek certainty. Well, what about you're in a business where you can't avoid risk and you don't have certainty? You see, you can't have it. Well, that's what took me years to figure out, unfortunately. So that's me. That's just the way it was. And part of that has to do with starting in 1980, because there were no off-floor traders. I never met one. So all my buddies were floor traders. So that's kind of where I came from. And I didn't even come into business to be a trader. So another story. And I was brought into the business by one of the largest grain traders in the world. And initially I was going to go down on the floor. But instead, I got mesmerized by charts. Can't tell you why, but I did. What is this? What is this going on? Got very interested in it. And then technical analysis was really in its infancy. And by that, I mean math-based. So math-based, like Wells Wilder, that kind of stuff. So anyway, not important. What's important that you understand is anything you've done, not anything, but most of what you've done, I've done. And I paid a huge price for it. And I decided to do TraderLab and create it was because I don't think you guys have to go through the curve I did. It doesn't mean you won't, still do it or be driven to do it by your psychology. That's all fine. That's what, New Year's is for. It's kind of reflect. What are you doing? Are you doing what other traders do? Is it realistic to expect a different outcome? That's all. And I coined the term Trader Groundhog Day. I work hard, wake up in the same place. Change this, do that, get a brilliant idea, work on it for a while. I mean, a while could be years. Have winning trades, think that I'm on the path, just got to make it a little better or do this, that, a little salt and pepper, and still end up with the same thing. In spite of winning trades, winning weeks, winning months, still have a process that was not sustainable, and I couldn't solve it. I thought it was do different things, different mixes. I'm just telling you that's me. Maybe I should have been brighter. I have no idea. But that's what I knew, and I was going on the best information that was available to me at the time. And if I knew different, I would have done different, but I didn't know. So it cost me years. Does that make sense? Okay, thanks, Dan. So guys, what are you going to do differently? let's think about this coming year. Are you going to do what you've been doing? And the only reason you should keep doing what you're doing is because you're extracting metrics and you're getting rid of the things that don't work. If you don't know what gives you an edge or is profitable process, and you're making it up and you're responding emotionally, then you have a lot of work to do. The work is knowing where your trades will show up before they get there, not making it up. The idea of TraderLab is to help you build a trade plan. It's not complicated. Remember the difference. Complexity and randomness are not equal. So we want to get rid of complexity and strip it down so we can focus on the randomness and know where the trades might show up. And then anticipate them. When I'm putting a trade on, I'm not chasing the market. My rules say if you miss the bus, you wait for the next one. There's always another bus. FOMO will get you to do things that are not in your best interest. And we're all subject to it because it's primal wiring. You've got to learn about that. And you also need to learn detachment. And these are not easy elements, by the way, because in the moment, you get myopic and you get tunnel vision. Do you experience that where all of a sudden all you see is this? Do you know this is an entry right here? You know that this is an entry in the TraderLab? Do you know that's an entry in the TraderLab? Do you know that's a scale in the TraderLab? If you're not in the TraderLab, you wouldn't know it, would you? And even if you do know it, you might not have vetted it because it's only qualified under certain conditions. This is why plug and play cookie cutter trades don't work. And how do I know that? Been there, done that, haven't you? So if it doesn't work, why are you going to keep doing it? So what are you going to do this coming year? It's a great day to reflect. Today, tomorrow, over this coming weekend, stop, take a breath. This is your business. It can create financial independence. And I'm not saying no matter what you do or where you go that this is right for everybody. It can't be, because you really have to become very good at something. And it's not going to come in 3 months or 6 months. Don't we all wish? It doesn't work that way. You're investing in a career. It's no different than becoming a professional athlete or a surgeon or a high performer, a musician. You know, you have to go through the curve and you have to develop and get to a place of unconscious competence. We all start out incompetent. We don't even know it. Then with work and creating structure, you can develop conscious competence. In other words, formulaic, but it's almost like learning a foreign language, right? You're not fluent, but you start learning the words, but you have to stop and think about it. Then over time, it shifts to where you already know based on what you've seen so many times, and you understand why. If my sellers took control here, and this is my retail price here, that if I come back here, I can sell this, I can sell this, I can sell against this. All these are continuation trades if you understand them. Not saying it's good, bad, or indifferent. I take stops too. You don't think that goes away, do you? Nope. But if I take a stop, it's going to be because I put on a trade that gives me an edge. And I understand to get profits, I have to pay overhead and cost of production. So I've separated myself from this need to be right. By the way, I still feel the fear. 47 years of trading, because I'm wired for it. I tried for years to get rid of the emotions, didn't work. I really did. And I've talked about it. I used a big rubber band and I'd stamp my wrist, behavior modification. It worked on my dog. I figured, hey, maybe it'll work on me. Didn't work. Then instead I had to understand it better, understand the triggering mechanisms, understand the primal wiring, the fight and flight, looking for certainty, avoiding the saber-toothed tiger, primal. It's under the conscious mind. Do you understand the chemicals that are released, the hormones in your brain? If you don't understand these things, then you've got a lot more work to do. You need to understand yourself. Once you understand yourself, and it's a deep dive, you have to understand what's going on in your mind at a level you're not aware of, but it controls what you do. You're not making a decision based on your interest and intent. You're responding to stimulus. The primal mind cannot differentiate uncertainty from the saber-toothed tiger. It's in a fight and flight mode when it's fearful. So cortisol. So your senses. You see, do you understand this? Now, if you don't, you should come to TraderLab. It's just one of the many elements that we discuss in TraderLab all the time. And the reason TraderLab exists is to help traders like me, like you, save time, get better, find out how to build out the business, and maybe create sustainability. Trading isn't for everybody. Wouldn't it be nice? But it's not, because it's going to challenge you beyond anything you've ever tried. You can't imagine what it is until you've done it. Like I said, I can't even talk to my wife about it because she can't relate to it. She has learned, though, to ask me, did you make any money today? Not to ask that, because that's not what this business is about. Dollars are a result of trading with edge, not one day or one trade. So this is TraderLab. Just as a community, there's a lot going on in here. Thanks for posting and contributing. You know, we have traders in here who share. They post their trade plans. They help traders understand how to build trade plans. We have traders in here that do data mining, extensive data mining, to share statistics with us to give us a better understanding of probabilities of one outcome over the other in a random environment. This is my primer webinar. And Ned, thanks for curating this for us and for everyone who contributes to TraderLab. There's a lot of contributors in here who, and we know who they are, and who give and never ask for anything in return. They share. That's the power of the TraderLab. And if you want to be in a community like that, you might want to visit. This is the primer webinar. It talks about anchored inputs. Meet the TraderLab. This is an advanced trader methodology. Now, advanced, remember, is not complicated. But to think in a different way is not plug and play indicators. What's advanced about it is you actually have to learn how to trade. And the thing is, trading is not complicated. Remember that. It's just random, different, right? Is there a holy grail of trading? Well, everybody says there is, but no, there isn't. But how close can you get? Well, maybe you might want to find out. Day trading, fantasy versus reality. Are you a gambler? Well, if you are, that's going to be a lot of fun, but I think you better go in a casino, getting the cocktails and the ticket to the buffet. How to trade in multiple time frames. How about this? Day trading. Why most traders using indicators fail. Are you trapped in Trader Groundhog Day? This is what you want to look at over this holiday as you reflect. What are you doing that works? What are you still doing that is an obstacle that you are holding on to? What can you do about it? Are you waking up with Trader Groundhog Day? That was for me. That was me. Okay. And I just created that for me. Trader Groundhog Day. Except for me, it was years. Trader Groundhog Day. Order flow and volume profile, how you put them together. Trading in high volatility with reports. Understanding squeezes. And what about microstructure? These are the things I talk about all the time in the streams. And there's a library of webinars in TraderLab. As you can see, there's a document section. I talk about statistics, pre-planning, a glossary, audio that was done, mental obstacles, and a trade loss tracker. By the way, what's a trade loss tracker? Greeny wrote software and gave it to us like others have. And how do you measure the cost of your errors? I found for me, when I started measuring my errors many years ago, that I was throwing $10,000, $20,000 a month away by errors. I wrote a check out back when we had paper checks. I put that up on top of my monitor. So every day I'd sit down and look at it. Guess what? A lot less errors. You might be a borderline or already a profitable trader if you quantify your errors, because errors are just throwing dollars out the window. Losses with a structured vetted trades or just overhead and cost of production. Do you know the difference? Please give a like, and don't forget, last day for the New Year's special, 30% off lifetime license to Global Plus. It's good through tomorrow. Never seen it before. Don't know if we'll see it again. Don't forget, go to bookmap.com, check it out. And there's also expiring today sales, 50% off add-ons, expires 31st, 60% off monthly Global Plus subscription if you want to put your toe in the water, and 50% off quarterly subscriptions. All of that information is available at bookmap.com. Thank you so much for visiting TraderLab. Hope you appreciate what we do in TraderLab. If you haven't visited TraderLab, use the link in the bottom of YouTube. There is no cost. You won't be solicited or otherwise abused. Remember, it's a professional community. It's about the business of trading. It's not romper room. So if you're looking for a professional environment and you want to build out the business and you're willing to roll up your sleeves, become a part of this community, contribute to it, so you give and you take, then we can all work together towards having a better year. Thanks again, guys. Don't forget to leave the link. Appreciate all of you who are in TraderLab for all your contributions. Let's keep working together and have a great year in 2026. See you then. And I actually will be streaming on Friday. So see you on Friday and have a great day. Thanks so much again for visiting the TraderLab.